Hello, hi, I am Hitesh Singla and I welcome you to another market update from 7th to 11th of April 2025. Last week was a very eventful week where a lot of things happened. So let's start with the first news that we have. RBI delivered its monetary policy in the last week. In this policy, the RBI reduced the repo rate by 25 basis points. Now the current repo rate stands at 6 percentage point. The policy stance was also changed to accommodative from neutral, signaling that the MPC may consider further rate cuts going forward. Also, RBI revised the GDP growth projection for the financial year 26 from 6.7% it had estimated earlier. It is now reduced to 6.5%. With the global turmoil and all the trade restriction, the RBI thought it was the projection has to be revised. But on the other side, the RBI also lowered the inflation projection for the financial year 26 from 4.2 to 4%. So now the current projection for RBI for the inflation stands at 4%. India also released its IIP number, that is the India's industrial production number. There was a bad news that it had slowed down to 6 months low of 2.9% in the month of February. The main three culprits, the manufacturing slowed to 2.9%, mining output also slowed to 1.6%, even though the electricity output increased to 3.6 percentage point. Um, in the manufacturing sector, we could see that the basic metal, it had shown a growth of 5.8%. Even that couldn't help the manufacturing slowdown. Uh, the export-oriented segment, leather and related products, were in the contraction zone at 9.4%. On a basis, capital goods, consumer durables, construction showed a growth of. They were in a expansion zone, showing a growth of 8.2%, 3.8%, and 6.6% respectively. Consumer non-durable was in a contraction zone again for this for the month of February by 2.1%. So moving on to the world economy, the major event that happened was in the US 10-year Treasury bond yield. Last week, when we discussed, we were looking at this number. It was after the crash in the US market, the yields had actually softened to about 3.9%. But this week, there was a sudden movement, and the yields hardened to 4.49%. Somewhere in the week, it also crossed to 4.5%. So this sudden spike in the yield actually created a lot of havoc in the mindset of the people, where the this hike is also being attributed to Donald Trump rolling back the tariffs which he had imposed on the all over the world, the reciprocal tariffs that he had unveiled last week. Another thing was there are being questions being raised on the safety of the U.S. Treasury bond yield, and how the world economic order has changed as of this now. This 10-year Treasury bond yield is a major focus area that we need to track for next few weeks to see that was it a transitory thing that we could see, or it would remain stable at that this point. Contrary to the move in the bond yields, US dollar index actually came down and closed at 99.78 down, which was down by 3% from the value in the last week. Both these things were moving in a very tandem fashion, and sudden divergence is could be seen this time in the dollar index. A lot of volatility was seen in the oil market. Brent crude oil trade closed at $64.59 a barrel, down by 2.23% from the last week. We could see that the dollar was trading somewhere in the range of 64 to $65 a barrel, and then suddenly went down to below 63 closer to 60, and then came up, and then it again went down and closed somewhere close to $65 now. Asset which was seen protecting the volatility for the week was gold, where it started moving up after a short brief period of pullback which we are seeing in the last few weeks. Gold in the Indian market was up by 6.53%, where the MCX gold price was close to 93.887 per 10 grams. So let us now look at how the market performed. Overall, the US market ended this week in the positive zone. The European market was somewhere in the negative zone, close to 1 to 2%. Asian markets had a mixed kind of an output. Gift Nifty was up by 3% point. Hang Seng was up by 5%. Shanghai was up by 4%. Whereas the Japanese Nikkei was close to was flattish in this week. Coming to the DIS and the FII activities in the Indian market, FIIs again after the bumper purchasing month, which they did in the month of March. April has been a negative month for them with all the tariffs and all the turmoil in the world. The FIs turned negative again for this week. They sold close to 20,911 crores worth of Indian equity. DIS have been in their buying spree since long, and they bought 21,955.62 dollar crores worth of equity. For the month of April, FIIs had sold 34,641 crores worth of equity. DIIs had bought 27,588 crores worth of equity. If you look at the weekly performances, markets in India were fairly flattish. Sensex was down by 0.2 to 0.3%. Nifty Bank was down by close to 1%. Nifty Mid Cap was down by 0.3%. Nifty Small Cap was up by 0.1%. Looking at the PE valuation, since there was not much of the movement, so the PE valuation stands as it was in the last week. Nifty 50 trailing PE is at 20.8, below 2 years and 5 years average. Nifty Midcap 150 trailing PE is at 32.8, just below 2 years and 5 years average. Nifty Small Cap 100 trailing PE is at 28.2, just above 2 years and just above 5 years average. Buffet indicators still shows that the Indian markets are modestly overvalued with a ratio of 112.94. That was all from my side. Hope you enjoyed the video. Do share, subscribe to my channel, and thank you for watching.